In the early 90s, this legendary investor financed the tiny precious metal stock at 78 cents. It then proceeded to run to $48 a share. In the early 2000s, he started a fund for uranium stocks with $15 million. This fund went to $500 million. Today, this investor, along with some of the biggest power players in the resource market, are investing in one tiny gold stock. With 4 million ounces owned through acquisition and a majority stake in a uranium play with $1 billion giant, this small stock is being aggressively accumulated by insiders, who include names like our legendary investor, Rick Rule of Sprott Asset Management, Doug Casey of Casey Research, and Mario Gennaro, dubbed the most influential man in Brazil, where this 70-cent a share company has its flagship project. It's time to back your portfolio with hard assets and partner with the right people for success. Learn more at futuremoneytrends.com/goldstock. Greetings and thank you for joining us at futuremoneytrends.com. I'm here with the Silver Guru. He's been a good friend of the show and a good friend and mentor to myself and my partner. He's the author of The Silver Manifesto, along with Chris Marquise. David Morgan of Silver Investor and David Morgan of the Morgan Report. If you're looking for investments, high quality, where you've got a trained expert who's seen these cycles, studied these cycles, and pretty much knows everything there is to know about this specific commodity, silver and other commodities, this is the guy to talk to. David, thanks so much for joining us.
Well, thanks for the nice introduction. I'm not sure I can live up to it, but I appreciate it.
David, you've always been very honest with us. Sometimes you're right and sometimes you're wrong, but you know what? You've never held anything back, and I think that's all the audience can ask for. Your new book, The Silver Manifesto. It was the goal to make it like the Silver Bible, because you guys covered everything there is to cover on silver.
Pretty much, Daniel. The idea, actually, on the first book that I wrote, by myself, Get the Skinny on Silver Investing. First book I wrote, there's a precise format. There's a precise amount of pages. There's a lot of coaching, I'll call it, as far as what the content can have. So this really was a kind of a primer on the silver market. There's still good information. A lot of it's outdated. You can get that book used on Amazon for, I think, $4 or something. But the idea was to be an author and put it out there. But in the back of my mind always was I wanted to write, a book that encompassed, almost everything you could write about the silver market and include the economics behind precious metals. In other words, why the system has always failed when we go from like a gold standard to a fiat system, a failure, and then a restart with a gold standard and back on the fiat and a failure. That cycle happens again and again and again. So I felt it was important to get that part in the book as well. And those two chapters were really the most difficult to write in a manner that would be engaging to the reader, and just very easy for anyone to understand, because when you say the word economics, most people immediately start closing their eyes, and a few minutes later they're snoring. So we did our best, and we rewrote those two chapters about, I would say 5 to 6 times. But it was a great effort. I would not have been able to accomplish it without Chris Marchese's help. Chris did a few, we worked together quite well. And it was a long effort. And David Smith, who's been with us for a very, very long time, had great input and helped. He's probably the best writer of the three of us. So it was a combined effort. It's finally done. I'm glad it's over. But yes, it was, our best effort to get everything out there that we think would be, pertinent to anybody investing in that metal. But also it's much deeper than that. I mean, you can apply those principles to gold investing, commodity investing, or really investing in anyway. And the specific chapter on how to invest in a mining company, I mean, that is so detailed. That chapter alone could be a special report and sold for, a significant amount depending on the requirement of whoever the purchaser was. In other words, if you were a securities analysis type and wanted to do your own deep research on how to value a mining company, that chapter is it could be very, very valuable to you.
Yeah, no, the whole book is a gold mine, or I guess I should say a silver mine, because I was going to bring that up. Analyzing a mining stock, it's very difficult. It's not like analyzing Disney or something. I mean, these stocks are, they have a finite resource. They're using they're depleting essentially their product, and then of course with their exploration company, they're literally just kind of surviving off of financings, and they don't even have income. So it's very difficult for someone who just wants to look at a mining stock. That's why, honestly, I suggest them actually go to your site and go and look at those vetted companies that you guys and your team have hand selected and spoken to the management. It's just such a risky business. I wanted to, before we get into silver, I did want to talk about what you're talking about, the economy. With all the outstanding debt and just the trajectory of the U.S., do you think the Fed can ever truly raise interest rates, or will we never see normalized interest rates until this whole thing resets?
Well, it's a great question. I'll give you my take, and people can think on their own. Obviously, they can extract from what I've said and determine other thought patterns. So let me start. First of all, yes, I think that they will do a token, quarter basis point or maybe even a half basis point over time. I think they're almost compelled to do it to show how strong they are, which is ridiculous. I think the deeper, more important question is an understanding. A friend of mine in Germany just wrote a great article on rising interest rates in gold, which you can find on our blog. But the idea about interest rates being negatively correlated to the stock market and the gold holds merit, but only if you understand exactly where it takes place. So let me explain. If you go back to the first bull market that I lived through, the gold was rising strongly as interest rates were, until the interest rate was pushed up to a level that gave a true rate of return. So again, let me go a little deeper. If the inflation rate at the time was purported to be 13%, and that's pretty accurate in those days, they actually didn't do all these hedonic indexes and all this nonsense. Okay. The only way that a bond investor would invest is if he got a return greater than 13%. So people were rushing into gold at the end of the market because inflation was so high, and other reasons, destruction of the dollar, inflation, for whatever the reason. They were buying gold hand over fist, silver even more so. And interest rates were much lower than that, and they started to raise them. And so until Volcker came in and said, look, we're going short-term rates at like 17.5 and the long bond around 20, then that was like 6 points over the inflation rate. So now you're getting a 6% real rate of return, not the nominal nonsense crap that the government puts out saying there's only 2% inflation or some hucky puck like that. The real rate of inflation, according to John Williams, is somewhere around 9%. So let me round it down to 8% or even 7%. So until interest rates really get up to like 8, 9, 10, 11%, you're not getting a rate of return. You are losing money every time you buy a bond just because the real true inflation rate is higher than the bond yield by a significant amount. Now, the Fed cannot get interest rates that high because it will collapse the system. But most people have no conception of what I just stated. They really haven't thought it through. They really don't understand it. They, think that the bond yield thing is something that's very difficult to understand. It really isn't. But that's the situation, the way I see it, Daniel, that, I think they'll make some token amount chest and, say, wow, look at us. We're so tough. We're so strong. The economy's doing so good that we can raise interest rates. Wow, wow, wow. It's all show. It's all nonsense.
David, just to give people an idea, if interest rates were to rise, let's say 7%, wouldn't that equate to about, that's a good 1.23 trillion in interest payments, right? Let's round the debt up to 20 trillion and 7%. So let's say 1.4 trillion, right? If you were making interest payments on our debt would literally be $1 trillion of just interest payments, correct?
That's right. And that's why, the real reason interest rates have been so low is because the debt service has gotten so onerous. The only way that they can pay it is to keep interest rates so low. It's all about them, nothing about us. I mean, they say it's about us to stimulate the economy. That's nonsense. It's all about the banks, and we find the banks to keep the banks going, and they'll do anything possible, including, taking your funds from you in the event of Cyprus and, what's going on a global basis. And the laws are already intact for that to happen here. So look, you've got to protect yourself. You've got to think. You've got to take action, and you've got to basically look at what is taking place in front of your eyes and act appropriately. But you're exactly right. That's the main point, and that's the one I wanted to make. I'm glad you made it.
Now,
let it happen. If that happens, then the game is obviously over.
Yeah, because I think, we spend like 3.5 trillion or something, but I think our income's only like 2.2 trillion. So then it's like 75% of U.S. income from taxes and other places we get money from would be a good 75% of the income. It'd be insane. Okay, so this seems like, man, if you were trying to make the story for why you should own gold 10 years ago, today it's just blaring. It's a blaring siren of owning gold and silver is even better. Now, the cool thing for investors today not only are you buying where the debt bomb, as you describe in your book, is just ready to explode, but silver and gold have been torn up in a bear market. And I kind of wanted to get your thoughts. I mean, I know you're watching not only just what's going on in supply and demand, but what goes on in conferences, gold and silver sentiment. Where are we in the bear market? Does 2015 look like a turnaround year, or should we just plan on holding tight here?
Well, if you own the metals now and they're fully paid for, just hold them. I think that's, sound advice. And of course, it's difficult if you have, $30 silver or, $1,800 or $1,700 gold. As far as where are we in the cycle, I'm pretty convinced that this year will be a turnaround year, which doesn't mean you can jump up and down and start clapping, because what that means is the bottom is either in or will come in later this year. And then by the end of this year, we should be at a level of above the low. In other words, silver could be, let's say, at the $20 level. Gold could be at $1,300. The longer we go into the year, the lower my expectations become of what the price levels will be by the end of the year. But nonetheless, my fundamental look hasn't changed, meaning that probably by September, October of this year, we'll know the bottom is in, and we'll start to see emphasis come into the precious metals and the hard asset sector, as I think the stock market will start to fall off. So there's a direct correlation that the worse the stock market does, the better gold does. It's the most inversely correlated asset to the stock market. So I really think that'll happen this year. I mean, these bear markets usually last, 2 to 3 years. I thought about 3 years in the silver market. I'm wrong. It's 4, and a little more than 4 now, a couple months beyond 4. And there's no set exact cycle on this stuff. I mean, there are cycles that work most of the time. None of this stuff works all the time. I know. I've looked at all this stuff. And, you can get cues and clues and do well, especially if you listen to the market itself. But the market needs to get above the, $18 level for silver. It needs to get above the $1,200 level for gold and stay there. We've been oscillating for about 4 months in a 3% range in both the metals. So they're just doing what's called an indecision pattern at the bottom. They're going up and down and up and down and up and down and up and down in this 3% range. And until they break either up through that channel or down through that channel, we don't know the next direction of the market. But the market does know that.
How about the mining shares? Does it look like they've bottomed out here, at least the higher quality names?
It's interesting you ask. I just did an update video for our premium members where I get on the computer and I open up the charts and I talk to them so they get my lovely voice. I'm trying to be funny here. I don't have much of humor, but so I look at it, and it was funny. I was looking at the HUI for all of our members and showing them, this is kind of odd because, and I like it, but the HUI is showing significant. I wouldn't say significant strength. That'd be an overstatement. But it's certainly showing that the bottom is in, and in a bull market, the miners lead the metal. And so far, so good. Even as lousy as the metals prices have been, the miners are showing pretty good strength in here. So I really, again, think that the bottom is here. A lot of my peers, Martin Armstrong, who's gotten extremely popular, says, not until October, I think, 15th. And others, this Avi Gilbert that I met at the PDAC that we interviewed for the last report for the Morgan Report subscribers, said it's coming up. But he had some caution clauses too. I think we all do. I mean, I've done my best, and certainly if I could change things for the benefit of others, I would. But, you got to do your best shots. I haven't missed a top yet. Certainly I've missed the bottoms a couple times. Yet, my biggest fear is missing the next top. I don't think I will, but I think I'll be chastised for it because the psychology becomes so strong at market tops that everyone says, no, it's going to keep going, keep going. In fact, I've already experienced that during the move from 26 to 48, about 35. I was cautioning everybody privately, of course, my paid members, and publicly on interviews like this. If you got to buy silver, if you have to buy it, just buy some. Don't buy it all. Wait, blah, blah. Of course, people don't hear what they want, or they hear what they want. They don't hear what you say, and away we go. And, of course, we peaked out, and I pulled the trigger, said sell. And, boy, there's some guys in the industry that have more clout than me that send me some interesting emails about how wrong I was, and silver's going to 100, and you're going to lose your reputation, and your business will be destroyed, and no. Well, you know what? I got that one right.
Nailed it.
And so, there's no guarantee for the future, I'm telling you that. But what I do know, having done the futures for so long, and I don't advocate that for everybody, believe me, but it is the pro's pro. I mean, when you're trading futures, especially trading silver, it's like being in the all-pro setup in the NFL. I mean, you are not with any pantyweights. You are with the strongest, best, most maniacal, hardest to trade against people on the planet. And that's true in the bond market as well. Anyway, because I've had so many, I've been beaten up and ground to the ground so many times, gotten up and redone it, that I've learned so much. And I'm able to pass on a lot of help to, my members. And because of that fact, I know to sell in the spring. I know to do it while everyone's saying, no, it's going higher. I know to do it, not try to get the last tick, which is an amateur's attitude. And I know once it starts down, you're not going to get out at a good price, or at least, so anyway, I probably rambled on too much, Dana, but I'm very emotional about that trade because, one good trade like that can make up for a ton of mistakes. And I just had an interview yesterday with a guy from another continent. He had 30 contracts on it that time and got out.
Wow.
Don't you think his lifestyle changed for probably the rest of his life?
Oh, big time. David, we got about 2 minutes left. I wanted to quickly touch on the kind of the sentiment out there where I really think, I'm looking at, all your reports and all your interviews, and it feels like this is a generational opportunity to really buy, and it doesn't matter. This could be in silver or tech or whatever, but this specific sector, whether you like silver or not, is a screaming buy. And I wanted to ask you about the Cambridge House show. It has been reported that last year they had 68 junior mining booths. This year they have 22. And then I was never at the previous one, so I kind of wanted to pick your mind. This is in Vancouver. This is the hot spot for all the stocks. Just to kind of get an idea, 4 or 5 years ago, how many juniors were showing up to the Cambridge House show in Vancouver?
Well, I can't give you an exact number, but I remember at the peak of the cycle so far that they had to expand into like the largest part of the convention center that they had. And it was just row after row after row. I'm sure it's in the hundreds, and I don't know how many. 400, 500, I don't know. I forget. In fact, the number was given to me, and sorry, my memory's failing me right now.
No worries. I was just looking for a ballpark, because at 22 this year, that seems pretty dire.
Probably 20, 25 times that amount.
Yeah, that's incredible. And as you know, you and I have met a few times at the other conferences. Palm Springs has been canceled. The hard asset people, they try to change the name to, I think, metals and minerals. That show's now just completely gone indefinitely. So it really does feel like that. And then when you talk to other let's say other publishers or even people that are, hedge fund managers. What's kind of like, in the circle of people you speak with and do business with, does it feel like this really is kind of the bottom? Are you seeing the retail people kind of shy off from silver, and now the big smart money is going in?
Yes. I mean, if you look at my bio and, think of me what you wish, but hedge fund manager wise, many have just totally left the market, totally left the sector. They're managing money still. Some are gone, but almost all of them have left this sector, the precious metal sector. On the large scale retail to / wholesale side, which is the major bullion dealers and depositories, I don't know them all, but I know a lot of them, and they're in the same situation where at these low prices, there's really not much buying either from retail or from wholesale, meaning, ETFs. Look at the ETFs. You haven't had a large purchase from a Sprott Asset Management, Silver Trust, or the Zurich Continental Bank, or the Silver ETF SLV, or any of these entities, and this is the time to buy. We're screaming low. You haven't had Stefan Spicer from Central Fund. So if you look at the wholesale side, big money has not come into the silver market in physical form. The fund managers basically have left the sector entirely. And then on the retail side, look at where the stock prices are. Yes, the HUI looks like it's made a bottom here. I just said that. I want to emphasize it, but certainly it's not on robust volume. It's been bottom fishers that really know what they're looking at, looking for good value, like we're, putting into our report still, because there is value there. In fact, this is the most overlooked, underloved sector. If you really want value, that's where you should be shopping now. You should be selling off some of these high-priced, know-nothings companies in the Dow or whatever, and come into the sector that's unwanted and unloved. But no, I can't say more than to emphasize what you said, Daniel, that sentiment is horrible, which is usually where you find the bottom.
David Morgan of the Morgan Report and author of the Silver Manifesto, a must-read. David, thank you so much for your time, sir. I appreciate it. I know you have another call in about 2 minutes, so we'll let you go.
Thank you.